My dearest friends and clients, it has been quite a while since we have been together, I know. It has been quite a while. As a matter of fact, I think it was actually approximately 3 months ago was the last time we met in this setting. But I'm around, and by now you all know that this is David Etienne from Etienne Business Solutions. Goes without saying. Now, there are a couple of things that I want to bring to your attention today. I remember when we left off approximately 3 months ago, I was on the topic. As a matter of fact, I had just introduced the whole concept of personal financial planning. And I had done the introductory video, and I'd outlined the various other topics that we'll be moving on to. But then again, that was 3 months ago. The first of that lineup, as I indicated back then, is the whole preparation of your personal financial statement. Okay, fine. Now, but before I get into today's topic, I really need to bring this to your attention. Matter of fact, I have my little notes right here. I want you to pay special attention to this, and as much as possible, take advantage of it. On Thursday, make note, on Thursday, January 23, that's next year, Thursday, January 23rd at 4 p.m. at the Conyers Rockdale Library, located at 834 Green Street. That's Conyers Rockdale Library, located at 834 Green Street on Thursday, January 23rd. I am having what I bill as my winter seminar series or presentation, winter seminar presentation. And the topic is cash flow management for the cash strapped manager. Cash flow management for the cash strapped manager. It's a free seminar. As I said before, it begins at 4 p.m. It's a free seminar. However, to be able to coordinate things properly, you're encouraged to register. And at the bottom of this video, you will see a link that takes you to the registration page. So it's a free seminar, but it's important that you register. Yes, seatings are limited, and also for planning purposes to ensure that materials are made available, we would need to know the numbers who are so interested. So once again, Thursday, January 23rd at 4 p.m. at the Conyers Rockdale Library, located at 834 Green Street, is where we'll be having our winter seminar series or seminar, and it's entitled Cash Flow Management for the Cash Strapped Manager. Free of cost, you need to register. Check the link below this video and ensure that you secure your place. Okay, good. Having said that, let's now move into the whole concept of personal financial statement. Most of us would never move to prepare a personal financial statement unless required to do so. And usually, if you're thinking of seeking some kind of funding, whether it be to buy a home or maybe to purchase a car or to undertake some kind of investment, then that is when the lender or the provider, whatever, may say, I need you to prepare or to produce a personal financial statement. However, in the overall scheme of personal financial planning, it is quite helpful, not critical, but it is helpful if you would just voluntarily, from time to time, determine what is your financial picture. It is very important because you see, as we like to say, or we need to look at it this way, that you need to be aware of your position here and now. What is your financial picture here and now? What's your financial reality? Because given the knowledge of your financial reality, you can better plan as to how to move forward. So let us look for a while at what a personal financial statement is, what are its components, etc., etc. Basically, a personal financial statement is a simple one-page document that lists all of your assets, all of your liabilities. It compares the total value of your assets against the total value of your liabilities, and the difference between these two numbers is referred to as your net worth. That's your personal financial value. That's your net worth. So I repeat, your personal financial statement will have, on the one hand, the value of all of your assets. On the other hand, the value of all your liabilities. The difference between these two values, assets on one hand, liabilities on the other hand, will give you your net worth. Now, let's look a little bit at the components of your assets, the components of your liabilities, etc. Your assets, by definition, simple basic definition is your asset is everything that you own, own, that belongs to you, and also things that are owing to you. Because you see, once something is owed to you, you may not have it in hand, but ownership is yours. So it belongs to you, just that you do not have it. A simple example is if you are a carpenter and you have done some work and the value of the work is $1,000. You have completed the job, so you have delivered the service, but you have not yet received that $1,000 check. Then that check is owed to you, but that money belongs to you. So in terms of what is your total value, monetary value, that $1,000 will be brought into the picture. So your motor car, your motor car, your home, if you own your home, your car, land, any kind of property, jewelry, artwork, you name it. Those are the things that you own, and so they are your assets. And anything that others may owe you, that also falls into category of your assets. So when you add all those, the value of all those bits and pieces, you come up with a number that represents your total personal assets. On the other hand, your total liabilities would be all the things that you owe. You owe. And I know you're going to say to me, yes, we're more familiar with that side of the equation, things that we owe. So it comes from the car loan to the student loan to the taxes, you name it. These are the things that we owe. Okay? So the things that you owe in total represents your total liabilities. Things that you own and that are owing to you represents your asset. So when we balance these two large numbers, the difference gives us what is referred to as your net worth. Naturally, one would hope that your total assets is of a greater value than your total liabilities. Because once that is the case, then it means that your net worth will be positive net worth. You own more than you owe. The opposite, if it is so, would then give you a a negative, a negative net worth, because if when you total the numbers, your total liabilities are greater than your total assets, then you end up with a negative net worth, which is really what you do not want to have. However, as I said before you embark on this financial planning journey, it is very, very important for you to know your starting point, to know your financial reality here and now. What is my financial picture? With that knowledge, I'm better positioned to strategize, to plan, to move forward in my overall financial planning. Okay, so that basically is what will represent your personal financial statement. Now, there's an element here that I thought very important I should bring to your attention, and that is co-signing. Now, I'm not saying you should not co-sign. All I'm saying is that co-signing have a level of significance to your financial picture that a number of persons are of which a number of persons are not aware. So back to this whole asset on one hand, liability on one hand, there's something, and I do not want to get technical, but there's sometimes called contingent liability. Contingent liability. And when you're preparing your personal financial statement, for purpose of clarity, for purpose of full disclosure, you will be required to also indicate on the statement any co-signing that you undertook. So if your child is going to college, or if your friend call you and say, I'm going to buy a car, but boy, they want another person to co-sign with me, to help me, and you co-sign, then you have just created on yourself what is referred to as a contingent liability. And you know the word contingent. Contingent meaning, of course, that it is based a particular event is based on, or is predicated on, or depends on a prior event taking place. So in the event that you join with me for me to buy a car and you co-sign on my loan, then you're not expected to make the monthly payments. But in the event I default on the loan, then the car people are going to come knocking at your door. Okay, so it is contingent on me not living up to my obligation. So it's a contingent liability. So if you co-sign for any kind of funding, financing, then you're expected to display, to put, to indicate, okay, or to declare, as the proper word would, to declare this contingent liability on your personal financial statement. Very, very, very important. Now, a personal financial statement is similar to what a company would call a balance sheet. So for an individual, it's a personal financial statement. For a company, it would be a balance sheet, but basically it is showing the same thing. It is showing the company's assets versus the company's liability. And the difference between assets and liabilities is called, well, for individuals, we call it net worth. For companies, we refer to it as net equity. Net equity, my assets, my liabilities, difference between the two, give me my net equity. And again, we would hope that we have a positive equity, net equity, meaning that the company's assets is greater than the company liabilities. But now, also know that your personal financial statement, because it primarily looks at your total personal assets versus your total liabilities, then your personal financial statement is referred to as a statement at a point in time. So if I should prepare my personal financial statement here right this minute, and if I get up and go to my computer and make a payment on my car loan, say, then right away my financial position would have changed. Because whereas I'd reported on the statement total car loan of X dollars, once I go to the computer and make a payment, that number is no longer correct. So you see, a personal financial statement is a snapshot. It is a picture, a still picture of your financial position at the time that you prepare it. The next minute, the next second, the next hour, it could actually change given the kind of activities that may have taken place. For that reason, for that and other reasons, if you were to go, if you were to approach rather a bank, financial institution, or whatever for any kind of funding, Some will require that in addition to having your assets and your liabilities reflected on your personal financial statement, some will also go a little further to say, I also want you to show your income and your expenses. Why? Think about it. Your income and your expenses, unlike your assets and liabilities, the income and expenses show your normal overtime pattern of earning and overtime pattern of spending. So that is a better indication as to your ability or inability to fund, to finance, to fund and to be, to live up to your obligation for any kind of funding or financing that you receive. So yes, you may have a very bright personal financial statement on the basis of assets and liabilities, but then your income and expense comparison also give a lot of information to show your ability. What is your income stream versus your normal daily living? Household expense, groceries, you name it, whatever the case is. So some personal financial statements, it is not the norm, but sometimes it is required that your personal financial statement should go beyond just assets and liabilities and also reflect your income and your expenses. That is a more over time picture as opposed to the point in time that the assets and liabilities will give. Good. So that in a nutshell is your personal financial statement. Personal financial statement. And just to do a quick recap, remember now we're saying that, or I would advise that, and if I may say, usually once you approach a financial planner and say, okay, I need you to help me to set up a financial plan, naturally, the first step is for them to say, okay, run you through a questionnaire that gives them all kind of information that would cause them, that would allow them to prepare your starting point, your here and now personal financial statement, so they will see exactly where you are, and that will be the launching pad from which the planning can take place. Okay, but I encourage you, whether or not you're seeking funding, you're going for a car loan or whatever, whether or not it is required of you by a third party or an institution, it is wise for you to, you don't have to be anything complex, very basic. You know what you own, you know the things that you have. Put things on paper and determine for yourself what's my financial picture so that I'm aware of, where I need to tighten up, what I can do, what I can't do, and be more informed as you go forward with any kind of financial planning that you will undertake. All right. So there you have it. That is one of the first basic steps we want to look at as you go through the financial planning process. Now we're coming to the close to the end of the year. And lest I end this video and totally forget, tomorrow is, well, I don't know, possibly tomorrow is when I'll be publishing this video. So if it's published tomorrow, then I'm saying today would be Thanksgiving. And to my friends, to my clients, to my associates, have a happy, happy, happy Thanksgiving from David Etienne, the person, and Etienne Business Solutions, the company. Right? Really appreciate you over the year, and I hope for you and your family a wonderful Thanksgiving. Okay. Now, as we come closer to the end of the year, I know my clients and associates are more thinking of taxes because before you know it, can you believe it? Before you know it, in another couple of weeks, we'll start to be hustling and bustling, getting ourselves prepared for the tax season. So I say that to say that we will be moving into our tax related video series very soon. And with that in mind, I intend to, between now and the end of the year, to get out the other four, I think about 4 or 5 additional modules that come under the financial planning discussion that we're having here. So personal financial statement is the starter. I'm going to go to another 4 to 5 modules, and hopefully we'll have wrapped it up by end of year, so that come January we can get back on the the tax train. Because at that point in time, individuals will want to know, what's new, what has changed, what's the implication. These are my circumstances. How am I impacted by A, B, or C? And so that will be topical then. And as usual, we will launch into that direction. Okay, good. So remember, at the bottom of this video is a link for you to register. I'll just repeat for the last time. Thursday, January 23rd at 4 p.m. at the Conyers Rockdale Library, which is located at 834 Green Street. Etienne Business Solutions will be having what we refer to as our winter seminar series. And the topic is cash flow management for the cash strapped manager. Okay, so come out, and as I said before, it is a free seminar, but you're required to register. This is a free, there's no cost to attend. But I encourage you to register, so at least we know that you're going to be there. We can make appropriate arrangements for the material that we're going to hand out, and any little nibbles that we may be prepared for you. So once again, thank you very much. This is David Etienne. Missed you for 3 months or so. I'm back. Happy to know that you're happy to see me. And so we'll keep these flowing as we go along. So as usual, remember to subscribe. Remember that if you have missed some of my prior presentations, they're all there on my site. And so you can definitely go back to check them out. Some of them may be relevant to you, some may not be, but hey, information is key. Knowledge is power. Knowledge is power. Soak it all up. That's my concept. That's my philosophy. All right. So, okay, until next time, God bless. Thank you for joining me, and keep on keeping on, keep on working hard. And I always say, keep on praying, keep on persevering, because once you hold the faith, success will be yours. Bye, and see you next time.